Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We are here discussing another bank failure. Will there be more? Is this a contagion? We're going to get right into it. Support the show. If you're liking what you hear, hit the like, subscribe, leave a comment below, share this with anyone that you think needs to hear it. All right, First Republic Bank failed and was bought out by JP Morgan. All right, I'm going to share my screen here, and we're going to take a look at what it looks like on a stock chart when a bank fails. All right, so just a couple months ago, First Republic Bank was trading around $150 a share, and now we fast forward a couple of months, and we can see that we've lost almost 100% of its value, and it closed the day at 31 cents a share. So that's what it looks like when a bank fails. Basically, what happened is, I'm going to go to an article here out of Reuters, and this is your hero and mine, Jamie Dimon, the CEO of JP Morgan, swore he would never bail out another bank again, but he's back into the bailout rodeo. It's a sweetheart deal for JP Morgan. The bank acquires nearly $229 billion of assets and absorbs some $173 billion in loans at roughly a 13% discount to book values. After taxes and paying the FDIC $10.6 billion, JP Morgan should get a $2.6 billion boost before integration costs, and JP Morgan doesn't expect its capital cushion to suffer. This is interesting, okay? Under normal circumstances, JP Morgan would not have been allowed to buy First Republic at all, let alone with backstops. Banks that already hold at least 10% of U.S. deposits are not allowed to obtain more by acquisition. JP Morgan already exceeded the threshold with $2 trillion at the end of last year. The deal enhances JP Morgan's and Jamie Dimon's clout. Citigroup, Bank of America, PNC Financial Services can only watch as their biggest rival gets bigger. The 4% rise in JP Morgan shares on Monday also indicates Jamie Dimon's ability to use the government's largesse to his advantage. Over here, we got a quote from Jamie Dimon after the acquisition. Our government invited us and others to step up, and we did. So he did this as a favor to the American people, not because it was in their own best interest. And you can tell by his quote right there. All right, so what basically happened? All right, First Republic's recent history. All right. First Republic, a regional bank, had been seeking to turn its business around while its stock shares started to plummet after it released a troublesome quarterly earnings report on April 24th. The bank carried billions in unrealized losses, due in part to its large book of single-family mortgages that were issued when rates were significantly lower. The bank's earnings report revealed it had lost $100 billion in deposits in the first quarter of 2023. So people were pulling their money out of this bank. All right, so basically, I'm going to give you the 30-second rundown here. Is this bank overextended itself? Okay, kind of like Silicon Valley Bank. They were too pigeonholed and they had too much of their investments into one thing. For them, it was they borrowed short and lent long. So they had Silicon Valley Bank had too much into long dated U.S. bonds when all of a sudden now that we're nearing a recession, the yield curve is inverted and they could have got a lot more if they went short term treasuries, right? Well, this bank had too much of its eggs in one basket. And that was they had too much in 30-year mortgages from years ago when we all remember when the Fed funds rate was 0.25%, and you could get a 30-year mortgage for 2%, right? Well, the bank had a lot of its investments in those mortgages that now 30-year mortgages are up around 7%, right? So why would you keep your money in a bank that the majority of its fund is only making 2% when you yourself could do, just like we've been doing it in the Hive, is put it into short-term treasuries and get twice that, right? With inflation at double what they're getting in those 30-year mortgages, that bank is going to have a bad time, and they did. They got bought out by the biggest bank, JP Morgan. All right, So what does this mean for you if you had your money at First Republic Bank? If you went to the bank, you noticed that the doors were closed. Well, what's going to happen over the coming months is those First Republic Bank signs above that bank are going to be taken down and they're going to be replaced by JP Morgan Chase. So you're no longer a customer of First Republic Bank. You are now a customer of JP Morgan, and that's it. Your money's safe. You'll still be able to use it. But basically what this means, macro, big picture view, is we've gone now, we have about 4,700 banks, and they're starting to consolidate. I think this is going to continue. I think more banks are going to start to fail, ones that didn't balance their books right? They're going to be bought up by bigger banks like JP Morgan. And as that happens and we whittle down the number of banks, that becomes less and less competition. That's not good for the customer, but it is good for the bank that's buying all of them, right? If we have less and less competition, they don't have to pay as much to depositors, right? What I see happening, and I hope I'm proven wrong, I think this is a step towards a CBDC, a central bank digital currency. What that will mean is now the bank can send out a central bank digital currency, not in the form of paper cash, but in the form of digits on a screen in your bank account. And they may force us to switch over to the CBDC by doing things like only offering welfare checks on a CBDC. If you sign up for the FedNow system or whatever they put in place, you only get your Social Security checks if you sign up for the CBDC. But once they get enough people on there and they have a monopoly on it, they can start putting expiration dates on it. Here's your Social Security check. It's going to lose 10% of its value every month until the end of the year, and it's marked worthless. Now, what that will do is that will allow them to pull the levers like the Wizard of Oz behind the curtain. And if they need to stimulate the economy, if they put out all these Social Security checks, they can say it'll be worth less by the end of the year, kind of forcing you to go and purchase something with it. It's better to get something from it than nothing. All right. I'm going to share my screen here again, and we're going to take a look at some of the charts and the reaction that the metals had, the precious metals had to this banking crisis. So if we zoom in here, this is gold. And if we take a look, gold closed last week at about 1980. Okay. Then Monday, it opened up around 1980. And on Wednesday, FOMC meeting, it shot all the way up to just above its all-time high. All right. So as it sits now, gold closed Thursday today around 2050. All right. So we went up from 1980 to 2050 just this week. We pierced the all-time high. You see this red line right here? If we scroll back here, we can see that it touched this red line twice. Once was back in August of 2020. Then we had the Ukraine-Russian war premium. It touched it again in March of last year. And then if we zoom in here, yesterday, May 3rd, it touched the all-time high again. And unless my graph is off here, I think we just eclipsed it. Although it wasn't intraday, it was just for a hot minute. We are knocking on the ceiling of an all-time high in gold. Super exciting. I think this is going to be one of the bets of the decade. We'll take a look at silver here. Silver is also performing quite well. Wasn't that long ago we were down at $20. That's when the Hive made their physical bet. And we closed the day above $26. There's a lot of resistance built up around 26. We've kind of hitting a double top here from just a couple of weeks ago. I think we're probably going to have a little bit of consolidation in the metals, and I feel quite confident that we are going to be off to the races and hitting a new all-time high, not an intraday one like we did, but I mean a real all-time high up to 2,500, 3,000. I think the metals are going to do quite well. Remember, when people are concerned about the purchasing power of their currency, they run into safety, gold and silver. As a side note here, oil is looking pretty cheap. We got in, this is a common oil ETF, ticker is XLE. They got Chevron, Exxon, ConocoPhillips, like that. It's a basket of these. Got into those a month and a half ago, and it's gotten even cheaper. So oil has shot down. It was about $63 a barrel a couple days ago. I think now it's kind of leveled up a little bit to around 68. Not a bad time, I don't think, to place a bet on oil. And we're going to go to TLT here. So this is the 20-year Treasury bond. You can buy and sell this thing like a stock. You don't have to hold it for 20 years. But basically, after the FOMC meeting and Jerome Powell's comments, remember last show we talked about if Jerome Powell has some language in there about pausing, right? So they raised 25 basis points yesterday. If he had language in there that they're basically done, they're going to pause and see how rates normalize, see what the effect on the economy is. Remember, as they're raising rates here, it takes probably over a year for the economy to actually feel this. So we're only just beginning to feel the effects of the rate hikes that they started a little over a year ago. It's going to take a while for this to bake itself into the economy, right? It takes a while for these loans to come due, and then banks have to refinance or companies have to refinance, and now they're not refinancing anymore at 1%. They're having to do it at 6%. So it's going to take a little bit for that to get into the economy. But once it does, we fully expect TLT to be off to the races. What this bet is waiting on is it's waiting on the Fed to reverse and pivot and start lowering rates. Once they do that, bonds, the value goes up and the interest rate goes down. And right now, interest rates are, I'm doing air quotes, relatively high. So once they reverse and pivot, this one should be off to the races. I'd like to get one more bet here in on TLT. We close the day at 105. I think 103 would be a pretty good entry point. Hopefully we hit it. We shall see. Hope you guys got something out of this. Hit the like and subscribe, and I will talk to you next time.